it's a difficult, if binary situation that sets up for investors, right? Is there a middle ground where you can kind of comfortably hedge the possibility of either scenario?
Well, basically, we are looking at putting the money into, first of all, the high-quality bonds, because we believe that, yes, there are likely to be two more rate hikes from the Fed, but it is coming to the end of the hiking cycle. So typically, in times like these kind of bonds would be doing pretty well.
Right, so that's your bond strategy. What about equities?
In terms of equities, we are overweight Japan and also Asia ex-Japan. Okay, we are neutral in U.S. equities because we believe that the economy is doing very well in the U.S., as Chairman Powell has commented. So the recession probability, or the recession timing rather, has been pushed out to the first quarter of next year. And of course, the tech stocks continue to be relatively strong, so that's a major stay for U.S. equities. But of course, one would be seeing two things, okay? So, of course, you're hearing that the Fed narrative is still staying hawkish in a way, okay? And also the fact that the economic expectations has been revised upwards and upwards in the U.S. So it becomes much harder for U.S. economic data to beat their expectations, okay? So their economic surprise was really one of the key reasons why U.S. equities have been doing so well over the last few months. But if the hurdle gets higher and higher, it becomes harder to beat, and investors may be rotating into other regions, such as Japan and Asia.
I want to get to your tech call, especially U.S. tech, but let's go with Japan first. The Japanese yen very weak. What happens if the BOJ actually does pivot? It doesn't look likely so far from Ueda's commentary, but we know that this is really adding more pressure to the Bank of Japan.
Correct. So that dollar yen, we got to watch levels around 148 to 150. Okay, so that's a key resistance zone for the dollar yen. At that place, they may be forced to do something. Okay, intervention of some sort, right? Because it was just getting too weak in terms of the yen. Now, if the yen were to strengthen, right, because of this intervention, then it is likely that we may see a correction in Japanese equities because of the typical correlation between the dollar yen, also the Japanese equities, right? Stronger yen would hurt corporate earnings. Okay, that's a major driver. But on the other hand, if you're like a dollar-denominated investor in Japanese equities, basically, you will be gaining from that front. Plus the fact that this time around, unlike the last 10 years or so, there's a new factor in Japan, right? The improvement in corporate governance. And that's a structural factor. So we believe that if there were to be strengthening yen, which may hurt Japanese equities, it would be time to add to Japanese equities at that time.
U.S. tech, can you still add there? Because we're already at such high levels.
Well, in terms of U.S. tech, we would be looking for pullbacks, mild pullbacks in those. Because if you look at some of the, well, not so much of the top-tier tech names, but the more like the end of the top tier and the top of the second-tier names. Those names have already been showing some signs of tiredness, right? I would call it. And basically, one would be looking to add if the NASDAQ 100 falls to, say, 14,005, around that level, 14,000 or 14,005, around that zone. That would be a reasonable level to look to add some.